Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for January 14th, 2016. I am Frank Ochoa, aka PivotBoss, and here's a little analysis for you for the current session here. We've actually had a significant downtrending market ever since the beginning session of the year. Here you see the first session of the year. You can see price went offered right at the previous month's close price, which is also the previous year's close price, and we've seen a bounce off the 1981s modestly, and then boom, the stops came out and we saw a move right into our two downside targets, 35 and 1879. Both of those reached, and a very nice continuation. We also mentioned that any bounces will be seen as selling opportunities. So we knew that even though price was pushing higher day over day, we knew at some point here we're likely going to see bears come in and defend and run those downside stops. So we've seen it all play out according to plan here. Now we have to see how this thing plays out on the short term. You see this right here, this level is 1897.75. That is the 75% monthly expansion target. We have a 100% at 1869. So right now bears are attempting to keep price offered below 1897, 1900. Any push above 1900 would suggest a squeeze of the bears that came in here. That trap could lead to a retest back in 1950 with a shot to see higher levels. So we'll see how it plays out. Anytime you see a big move that happens, typically speaking, you see a session here where you finally find that low, you see the stops get run above that high, and then you see retests at that high defended, and then you see this thing take off. You've seen it time and time again, the way this thing plays out. So we're going to be watching this to see how it behaves. But any failure to hold, I would say, above that 1879 would suggest a continuation into the next lowest key level, which is 1814, and also the 1853 half level. If we take a look at the intraday time frame for the ES just a moment, you'll see here that after the previous session's significant failed range expansion, here was the top of the previous range. Price failed to see expansion above that range. That failed range expansion led to a move back to the previous low, and then a break through it into the 50% daily expansion level where it held. And now we're seeing a trading range develop on these lows. Not only that, this range kind of has higher highs on one side and kind of has lower lows on one side, kind of an expanding wedge or an expanding cone. So that tells you right here that we could see a move into 1900, then come back, then see a move into 1870, then pop back and see 1905. And we could continue to see something like this develop. But overall, 1900 is going to be the key level here. Above that level would suggest a return to 1914, 5-day VPOC, with a shot to see the top of value at 1942. Staying below 1900 would suggest further overall downside price discovery, but right now the idea is to fade the extremes of the range. All right, let's take a look at crude oil. Here's crude oil in a daily time frame. Obviously, still more the same. Downtrending market. When offered off the previous week's high price here, that previous week's high was rejected right away. I said that that implies a move to the bottom end of the zone, and a failure to hold above 35 opens up a follow through into the downside targets, which I listed at 33.21 and 31.28. We have since reached all those targets. The expectation is for continuation down to 28.91, which is the 100% expansion target from the key range. So I fully expect 28.91 to be tested. Right now we have an inside day. Bears are being offered, or offering rather, 32.10. So 32.10 is the short-term key level for a shot at 28.91 and lower. Any push above 32.10 would suggest a return to value at 36.88. Let's take a look at the intraday time frame just briefly here for crude oil. You can see how price is coiling up again within that inside day pattern right here, very tightly coiled pattern. Prices are just developing in this range, two-sided trade as price looks to fill in the imbalance here on the 5-day profile. Filling in that a little bit more and bringing it out could potentially lead to a VPOC shift downward, and then watch that VPOC for it to either go bid or offer, and that'll tell you right now which side's going to get their stops run. So this is going to be an important range to watch. Here's gold. Gold in a daily time frame here. Obviously, we've been talking about this rounded bottom here We've been talking about the previous month's high at 1088 and also the key levels at 77.90 and 72.10. So I mentioned that any pullback was likely to be defended by bulls looking to see another squeeze higher. Right now, that's currently in process, but bulls need to get back above the previous week's close price there at 1097s. That's going to be the area. If price can get back above 1097, you're likely going to see a short squeeze of the bears that came in over these last 3 sessions, and that's going to lead you right into 1130 by the end of the month. Failure to hold 1077s opens up a move back towards support with a test at value at 1072. Lastly, let's take a look at the NQ here. Very significant reversal in the previous session here. What we had was a push beyond the 43.40 key level here and almost into the top of that recent range. And that's what I mentioned before. Here's your top of your range. Here was the bottom. And I mentioned you're going to see some fading to the extremes here. We saw the rejection of those price levels, and we saw a massive slam downward into our next key target, which was 41.74. So early in the year, I mentioned bulls were defending here. Failure to hold it would suggest a move into 43.11 and 41.74. We've reached both of those targets here 2 weeks into the trading year. Very, very nice. Now we have to see how this price play out after the recent movement. You can see some of the recent rallies that have occurred after significant sell-offs. Here's another significant sell-off, another rally. This rally this sell-off could spark another rally, but we have to see when that bottom is found. Right now, there is a key level here, the 100% expansion target at 42.09. Bears are attempting to keep prices below that level, and especially that CLVN here at 42.26. I would call 42.26 the key level to watch. Bears want to keep it offered for a continuation into 40.59. Above 42.26 opens up a return back toward recent highs 43.50s. So looking at the intraday time frame for the NQ, you'll see the downtrending market. You'll see the failed range expansion. Here's the failed range expansion above the prior session's high. That led to a move back to the previous low. And then from there, we saw further expansion into 42.26 and 41.74 are key levels. Here's 42.26, that CLVN on the composite profile. Bears want to keep that offered for more weakness. Above 42.26 squeezes to 5-day VPOC at 43.13. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.